Uh, Today, I'm gonna show you what I'm gonna be doing this week. Today is day 36 of my challenge. I'm kind of happy because I got some haters in my channel. So they start saying, you know, mindless trading. You don't know that. You don't know that. Guys, I bet you guys are not profitable with trading either. So, ah. All right. So what I'm gonna be doing is I'm gonna show you the way I'm going to be trading, obviously, and yeah, I'll show you my screen in a second. Basically, I'll just try to edge the shit out of them of my positions because as soon as the market ranges somehow, I will try to pull myself out of losing positions. So since my strategy in a nutshell just mainly has like 33% chance of making me win because basically I'm trading on breakouts, I'm just catching the trends and things like that. So I could catch a massive trend sometimes and most of the times like 7 times, 6 times in a row I'll probably just get the direction wrong, or the market just is not going to go anywhere because it's just going to close itself in a range. So I will just try to edge the shit out of myself. That this should allow me to lose so much less money, just a massive amount of less money. I will make less money, obviously, but the idea is that on average, I will be making a profit without these massive swings. So the strategy was kind of working in the back testing, and the times where I got it wrong was when I was just trying to catch the right direction and not managing these losses and getting so many losses in a row. So the because the market would range. So if the market was ranging, I was not able to make any profits. Now, how do I solve this problem? Well, I solve it by hedging a little bit more. So being more of a using the hedge as a tool for my trading. So I will try to short the market. I will give the trades more wiggle room, and I will just try to hedge the losing trades, or maybe just take those little losses. Okay, I'll show you what's going on in the market right now. What is the results of the back testing? Today is day 36, so I'll try to do my best. Haven't published any videos in the last 3 days because I was like, it was the weekend. I've back tested a lot. I will show you the results of the back testing, and also I'll show you what I'm doing with the train. So I'll show you the screen. I don't know if I can share my screen. I guess I can. All right, I'll show you the screen right now. And yeah, here I am. So it's 6th May 2024. So let's see what's going on with the market first, and just what's going to happen. What's my plan right here? It's going to be pretty easy, pretty obvious. So as soon as you get into the market here, you can see the obviously the Dow Jones is actually going up. So I'll give myself a little bit of a wiggle room right here because I actually tried to short the market right here because I saw this massive trend line. Oh, let me catch the pen right here. I saw the trend line actually going down, so I said, okay, you know what? I'm gonna be shorting this guy. But obviously, this actually did not work out at all. So I'm looking for the trend to actually break this little support over here. And if it does, I just look for it to tremble down. So this is actually not happening at all. So I've already banked a $5 loss. And I will probably bank another $2 or $5 loss over here, probably, if the market actually starts going up. So if the market starts going up, I'm going to have to close this trade over here with a minus $7 loss, and I will try to edge this guy over here. This is on average what I'm actually looking for, but I was thinking that maybe since I'm actually trying to catch the trend, I will have to actually probably close the trade on break even if I get a chance to see this guy actually tumbling down over here. I will start thinking about closing it to break even because I will be closing this guy in break even and this guy in break even. So I gave myself 2 chances to get the 1/3, okay? Because my trading strategy overall, as far as I've seen in the statistics, has a 33% chance of winning. So it's a pretty low chance. So it's a very bad strategy, and you will think, well, yeah, you suck balls, and I do. But the strategy makes me a lot of money when I catch the trend because basically it just explodes. So it's not about changing my strategy approach, which is just sketching the trend and following the trend lines. It's just about just not losing that much money, okay? So this is not doable if I don't edge because mainly I would have lost $5 over here right now already. And I wouldn't have given myself the chance to get a 50% chance of closing this trade into a break-even trade if it comes here. And I will check it. I will try to check it. I will see what happens because I have some alerts over here. So I can think about closing it to break even, but I'm not super sure. So I'll give it more chance. Now, say this guy is not going to be working. I will not close the trade into a break-even trade. I will probably give myself a third chance over here to short this guy. If this guy is not going to be shorting here, I got another chance over here to close a break even. I got a chance to actually make a profit over here because if it comes back down here, like I say, I short this guy over here from here. And if it comes here, I'll close this one to break even, and this one is going to be a loss. And if it comes over here, I will close these two guys with a small little profit, and this one is going to be a break even. And so I transform myself with a losing trade into a winning trade. Now, say this guy is not even going to work, like this one is not going to work over here when I short, I will have to edge. Now, when I edge, what I can do is I can actually accept the loss from this one, and just close this one as an edge. Or maybe I will have to go long for 2 lots over here, and I will try to not lose this much. It will be like probably a $10 loss on average because it's going to be like $5. So that will transform itself probably in a $10 loss. And I'm accepting this one as a $10 loss. So yeah. So I will close this one as an edge. And I am not losing this one if the guy is not working here. So I see the market going up, and I think, okay, I will go long. I will try to long the market. If the market starts going long, I will try to get as soon as possible into one more trade with a long in position. Now, this means that if the market goes up to infinite level, I would just let it go, and it would just go. And if it comes back down here, I will give myself more chances to close this guy into a break even. So if the market decides not to go long and just not to give me that, like probably 30 to 40% chance of, run up, because that would be where I would be making a little bit profit, just a little bit of a profit. If that doesn't happen, then that means the market is going to stop and probably come back down here. So if the market comes back down here, guess what? I'm going to close the trade. As simple as that. I'll just close the trade. And I close this trade into a break even. So I will find myself again into this range. And I will be able to trade again without having had to take this one as a loss. So this is the only reason I leave these trades open, because that allows me to have a chance to close that trade. If the trade doesn't work, that gives me a chance to close it to break even, which is the only thing I'm interested in. Like closing this one into a break even, I got a long here. The margin obviously still is the same, so I'm still in this range. But inside this range, what's going to happen is I'm going to try as many times as possible to short the market here, try to get some positions over here. If it's not working, I will re-hedge over here. So I can play inside of this range as many times as possible, as much as I want. Now the range is about, I'll take it. The range is about, this range counts as a 0.50% chance. So if the market moves forward for 0.50% chance, I could be closing it to the break-even point. I could be just taking a little bit of a profit. Obviously, what's going to happen is I'm going to have to have these margins blocked. So the only downside of this strategy is that you're going to have to keep those trades open. You're going to block the margin. So the only problem is that the margin is only open for the up position. It just works for one side. So it's cool because I was checking on the broker. So if I, for example, go long and I am only long in one position, this costs me around $177 margin. Now the margin is unlocked if I close the position and a loss, for example, and it's blocked and it remains used if I edge the position. So the margin is not multiplied. So that means that I could be having like 10 hedged positions all at once with a 0.1 lots with 1.7K dollars. That means if I trade one lot, I will need to have a almost 17K bankroll, so 17K account to keep 10 positions open at the same time. Now, how likely is that to happen? Like a web of edges? Well, not very likely, but it's going to happen. It will happen. But at the same time, as soon as the market just comes back down, comes back up, you can close the positions and you can try to manage those things up until the time you catch the big old trend and you let the trade just go with the flow. And this is all I'm planning to trade. So planning to keep these edges open, because if the market ranges, it's not going to be a good day. It's not going to be a trend day, happy day, and I am not in the right position with the trend. I will just leave those losses open so I can close them later on. And I will block the margin I have. So with 2K, I can almost have over 10 position open with a 0.1 lot. With 10K, I could have with a 0.5 lot over 10 positions open uh, on hedge. So that means I can have 10 edges open at the same time before I take the loss. And that's it. That's what I'm going to do. But the strategy implies that you don't increase the lot size for the edges you have open. So if you decide to edge this one, you can now go 0.2 here. You will go 0.1, and you don't go 0. I mean, you could go 0.2. That's pretty standard, because that means, I mean, you wanna if you go 0.1 and it goes up, the edge is closed. If you go 0.2, that means you're just going long, bro. Like it's just a martingale system, and I'm not gonna do a martingale at any time. So if you edge this guy at the 0.2 here and he just goes straight up, it's fine. You're only gonna need it to go, but it's not gonna be safe, because if it doesn't go anywhere, and you're gonna have to rehedge this guy down here, so it's gonna be a problematic situation. Okay, so I'm not for now. This is what I'm gonna be doing. It's pretty standard. So let's just see what happens. This is just me trading, and yeah, I'll see what happens today. Maybe the market falls down. If it falls down, I'll just take profits, and if it don't, that's it. Hedging is just something that gives me a little bit more wiggle room on my trades and allows me to just trade in a more relaxed and paced way than ever before. And yes, I will show you the back testing. Sorry, I tried back testing it. You can see there's many trades here, like 37 profit trades, 27 losses on average. In November, 1st November 2023, I managed to make like $2.67. Sorry, 2.67% of a trade. I back tested it in October 2023, and it was working kind of well. There's many situations where you're like, yeah, you're losing, taking these little losses, percentages and things like that. But I mean, sometimes you have to take those losses so you don't get web hedged, like you get these edges, crazy edges, and you get a 6.25% profit. I tried September 2023, wasn't working very well. I didn't trade very well here. So I'm trying to understand how to use in the right way the edge. I've started just like 1 week ago. And then I started back testing December 2023. So let's see what I can make. Actually is at 0.39%. Then that's just the percentage is going to be multiplied by the lots you trade. So if you trade a one lot, that would be $390. And if you trade one lot at 2.67, will be $2,670. And if you trade one lot here, it will be $6,250. And you can trade one lot on average with 20K account. So that will be over a 1.5% Dow Jones, it would mean something like, if you trade with a 20K account, that would mean $2,000, $2.5K, which is an average 5 to 7% of the account. That's what I'm expecting. So I will try to back test the strategy, and I will share with you guys the results. Probably I will post another video tonight, and that's it. So yeah, let's trade. That's the way it works. So thank you for being here. See you later. And also, thanks for the haters and the comments. Love that.